Caspian Sunrise is the company that's come out of the deal struck by Roxi Petroleum to merge with Bavistock, a private company with which Roxi held joint interests in Central Asia. The merged company has as its principal asset a 99% interest in the BNG contract area. With more, Clive Carver joins us. He's chairman of Caspian Sunrise. Welcome.
Thank you.
First of all, why the merger? What's gone on here?
We first invested in the assets that subject to the merger back in 2008, and at that point we had a 58% interest in them. We had the obligation to fund the next $100 million worth of development, which we did back in January 2015. So since then we've been sharing the development costs with Bavistock. A lot easier with us as a public company. They were a private business, to merge them on a pro rata basis. We now have 99% of the asset. We're in control. We've also capitalised 10 million of debt by issuing new shares. So therefore, with the exception of some local oil trader debt, we're debt-free with 99% of what we think is a very good asset.
Yeah, you mentioned the 99% interest in BNG, but in fact, I think you've got more assets as well, haven't you?
Yes, we have an asset called Moon Ali, which is much smaller, and as part of the package we bought back in 2008, we also had an asset called Galaz, which we sold last year for 100 million, and that's helped fund BNG. But BNG is very much the focus of the company.
Yeah, and I think you're pumping, what, 1,500 barrels a day, I believe, is that right?
We are. I mean, the BNG asset is about the size of the M25. It has got a number of shallow structures that we're targeting and some deep structures. To date, we're producing, just from the shallows, we're producing about 1,500 barrels a day from about 8 wells. The best 3 wells are on the MJF structure, which is something that's new, and that I think will prove very profitable in its own right. The real excitement, though, comes with the deep wells. We've drilled 3 wells of depths of about 5,000 metres each, all the way through the salts, and we are now trying to bring them on stream. And if we do, we think we'll have very large volumes of production and therefore of reserves as well.
Can you do that without having to raise money, or do you see that there's going to have to be some more money brought onto the balance sheet to pay for this?
For the time being, we're fine in terms of raising cash. We're using the proceeds of the sale of Galaz back to fund the business, and then also the proceeds of the oil we're selling at the moment. Going forward, and it's the advantage and one of the reasons for the deal, we're now in a position to say if we want to go faster, we can raise cash as a public company because we have 99% of the asset. We don't have to worry about the other 41% actually catching up and raising cash at the same time.
I was talking about the Central Asia as being the location here. It's Kazakhstan, really, isn't it? What's it like to work in there? Because it's quite a remote place. I don't know, do you have many other companies around you?
It is remote. I mean, for example, we don't have water on site, so we have to have that bussed in, and all the workers come in, they do 2 weeks off. We are probably the best part of an hour from the nearest town, but it is an oil and gas region. We're 40 kilometres from Tengiz. It is an area that has got very good infrastructure, both in terms of pipelines and when eventually you get to the main roads. So it has that mix of being remote, but being an oil-producing region. In terms of working there, again, it has been tough. I think we're one of the few companies to have drilled consistently in the last few years. We benefit because 99% of our staff are Kazakhs. We therefore are able to operate at a probably much cheaper capacity than expat companies, and as a result I've been able to carry on drilling.
What about the licence situation? When you awarded licences, how long they last, and what's the long-term prospect?
You get a series of exploration and appraisal licences, and after a while then you move on to the full production licence. So the position that we're at the moment is we've drilled 12 wells on BNG, we've got 3 deep, 9 shallow. In June 2018 we will have the opportunity to apply for a full production licence. The advantage of that is that you can sell oil at world prices, less tax. At the moment we have to sell at domestic prices. So the oil we're producing to date, we're selling at around about $16 a barrel. When we move to full production we'll end up more than doubling that price.
So what are you producing at? What's the cost of taking the oil out of the well?
The way we do it is that the local oil traders come to the field and collect it, so there's no distribution cost, and the oil is producing naturally. We don't have to have any stimulation. So it is very, very cheap to produce there. So most of that $16 we keep.
Right, okay. Let's look at where you go from here. Before we take a look at this broker note I want to talk about, you've got as a 23 pence target price there, well above where you are at the moment. Let's put this in some sort of context as to where the company's going this year, because clearly Ireland in their piece have got a trajectory of where it sees the business. How do you see this year developing? How quickly are you going to bring those wells on?
That's the great unknown question. I mean, we think with all 3 wells that they will come on. We've been there, we know there is oil there, it's just a matter of making them flow. I think each of them has got its own issues. I think the first one, we think relatively quickly we'll be able to get in there and do something. I think we'd be very disappointed not to have brought 2 of them on in the next quarter, and those are the deep wells that should produce between 2,000 and 3,000 barrels a day. At the shallow side, we're going to progress on that as well, because that's very cost efficient. The cost of drilling a shallow well is now only about $1.25 to $1.5 million. So we're looking to do at least 2 more on the MGF structure. We've got a well at the moment that's just reached total depth of 3,200 metres on a new structure. If that's good, we'll do another couple of shallow wells. So I think our production and plans are most important to bring the existing 3 deep wells into production, then to further improve the shallow reserves, and then as we assess the results, we'll do some more deep drilling.
Okay, that does indeed put some of this into context. WH Ireland coming up with a note to say that as of the end of February, of course this was Roxi Petroleum, yes, with a far relatively smaller company, 9.5 pence, I think the share price is around about then. They got a target price of 23.3 pence. Do you feel comfortable with that? So, I mean, clearly this is an enlarged group now anyway, yes, but do you feel comfortable with that sort of potential uplift from what?
Very comfortable, and I think if you go into the detail of their note, what they're saying is that's just really based on the shallow prospects. They have separated the chances of the deep coming in. So on the shallow prospects, based on what we found with the MGF structure and possibly this new structure, I think those sort of values can be supported just by that. I think if we are successful, and when we're successful on the deeps, then it'll be re-rated beyond that. But yeah, 23p is a target, very comfortable.
Yeah, okay. Well, look, it's a pleasure talking to you. Thanks indeed for dropping by and talking to us about the deal that has seen Roxi Petroleum come out now as Caspian Sunrise, talking there to Clive Carver, his chairman.